If you're a player like a Coinbase or a Robinhood, there's really only two businesses that you're running. You're either in the business of flows or you're in the business of tokenization, right? So if you're in the business of flows for somebody like a Coinbase, like the KPI that I use, for example, is how much crypto assets do you actually have on your platform? And I believe Coinbase, the last reported number was something like 300 billion, something like that. That's like 10% of all crypto market cap, which is a crazy number, right? Just think about that for a second. Whereas Robinhood, I don't think they really release these numbers, but if you kind of, prorate the amount of volume and stuff that they have, this is probably, I don't know, probably like 10x less than Coinbase, I would guesstimate. And so you kind of have to ask yourself, okay, in the business of flows, like how do you kind of create this continuous growth cycle so that you are still within that position? And just like three things I would mention there is like, okay, so for one, Bitcoin, right? Coinbase owns a lot of Bitcoin through the Zappo acquisition. Through the Bitcoin ETFs, I think they basically custody like 8 of the top 10. That's just continuous flow of Bitcoin that'll continue to go into Coinbase. On the Ethereum side, Coinbase is obviously a huge staker of Ethereum, and Base is now basically sucking all the liquidity on Ethereum onto their own platform. So that's also a positive aspect. And if you look at everything else, like all the other tokens that Coinbase lists, effectively, Coinbase can offer custody and trading services, and they can effectively go to the investors and VCs and the teams that are issuing those tokens, which let's say it's around like 30 to 40% of total token supply, and they can actually offer them a service and get those tokens on their platform, right? So there's a much stronger case for Coinbase, I think, in terms of like actually having leverage and being really upstream and creating that flow